Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, the first tick is still very flat. The Nifty at 10,657, 658. So that's 12 down. Rupee at 69. We've been long fearing that. So 69 was taken. Now 68.98 again.
We do believe that we are not in a bear market, and we will hit 11,300 during the course of this year.
Power supply to any part of the country is ample and in abundance.
We saw a record overvaluation of the small and mid cap index to the large cap index in Jan this year.
We understand that the draft report by the bankers panel headed by PNB Chairman Sunil Mehta has been submitted to the Finance Ministry.
I think we've seen the government being very, very proactive. So the GST Council has been extremely proactive.
So almost 50 points lower on the Nifty right now. We are down 0.4%. 10,624 is where the Nifty is at.
On the mid-cap side, there's absolutely no doubt that there's a lot of problem. 2% on the index after a 4-5% decline that we'd already seen series to date.
Markets end June series with sharp cuts. Nifty loses 1% today, ends below 10,600. Sensex barely holds on to the 35,000 mark.
Mid-caps plunge for the second straight session. The index has lost 4% this week and 15% since the start of the year. 40% of mid-caps are now in bear market territory.
Rupee breaches the 69 mark for the first time, hits an all-time low of 69.09 against the dollar. Fears over current account deficit widening, inflation rising because of a strengthening dollar, delta blow.
ICICI Bank slumps 3% after the reports of a fresh whistleblower complaint accuses the bank of extending loans to stressed borrowers through letters of credit and understating NPAs.
And as we get closer to the one-year anniversary of GST, FMCG majors are optimistic on growth. Marico's Harsh Mariwala says disruptions on the ground are mostly over, while Britannia's Varun Berry says the demand growth has been reasonably good. Well, those were the top 5 headlines from a tumultuous day on Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in the markets today in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Absolutely, terrible day for bulls once again. Over the next 30 minutes, we will talk about what the day looked like. We'll tell you the 5 top stories that we always use to tell you what happened during the 8 hours of trading. As Lata pointed out, we'll answer your questions as well. Joining us today to answer your questions are Angel Broking's Mayuresh Joshi, technical expert Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we begin the Q&A session, let's quickly take a look at how the markets fared in today's trade. We basically had a pretty terrible overnight session, Lata, and it showed as we opened this morning, although not that much early in the morning.
Yes, I guess early morning it looked like probably we fell enough yesterday, and we may be able to absorb the selling that we saw in Asia. But the Asian sell-off actually got magnified in India. There were, of course, expiry pressures. But importantly, crude is a very big negative for India. When it doubles up with a global risk-off, for India, it was a double whammy. But I think it's the mid-caps that took most of the attention. And rightly so. It was a lot of portfolio selling that we have seen. If you looked at the FII, DII numbers, they were minuscule. It was not, in fact, it was a buy number. The one that we got yesterday from the exchanges. So clearly this is portfolio selling in India, not coming from mutual funds. And that is understandable, because if you looked at the mid-cap index itself, of the CNX 100, 40 stocks have lost anything between 20 to 80% in 2018. Likewise in Nifty, 10 stocks are already in bear terrain. That is, they have lost 20%. So it's definitely hurting portfolios, especially the mid-cap space. And now year to date, the mid-cap index is, even at an index level, is down 16%. At 20%, it will be close to bear market terrain. And that selling begets selling. That's what we saw. We don't see it yet in the Nifty. That's because one HDFC bank and one Kotak bank hold up the index, but it could come.
Oh yeah, as you said, it could come, and it has not so far. By the way, the Nifty, for all the refrain about the markets correcting, is only down some 5% from its all-time high. So, I mean, it's
Year-to-date,
nowhere.
4%,
Yeah, absolutely. Okay, so this is what happened as far as stocks are concerned. Mid caps and small caps, the indices will come up on your screen. They had a bad day once again, 1.5 on small cap, 1.8, 1.9 on the mid cap index. Sectors, PSU, I mean, actually, there were very few sectors higher. PSU banks, energy, pharma topped the losing list. Large cap stocks which were weak. I mean, so if you thought Tech Mahindra kind of sort of shone through yesterday when the markets were crashing and falling, well, it lost all of yesterday's gains and then some. 7% on Tech Mahindra, top loser. HPCL was around 5.5. DLF showed up as a big one. We had Tata Motors, which is now at about 263. It's below the Feb 2016 levels now. Gas Authority of India and ICICI Bank were other stocks which were lower as well. M&M, NTPC, Infosys were three stocks which were up more than 1.5 or 1% actually. Okay, so broader markets, the bleeding continues. PNB 5%, Shriram Transport 5%, Jet Airways, Jain Irrigation, Adani Enterprises, Cholamandalam Finance, KRBL, IRB, Avanti Feed, India Cements, Emphasis, Venky's. Just 9 or 10 names on your list, but the list is a lot longer. There were some sort of gainers as well, but nothing of any, except CG Power maybe, which stood out 11% higher, but it's already lost so much. Jayaprakash Associates, which has lost 10% in the last 2 days, was up 5%, big volumes there. And Aptech also was up about 4.5%. But, I mean, broader markets, there were far more losers as compared to gainers. Lata.
Oh, absolutely. Well, let's check with our experts what they would do with the Nifty itself, the Nifty Bank. Mitesh, that question to you. 10,700 to 900 was the range. That got broken one day, and the next day 10,600 gets broken. Are we likely to see much further falls? Would you go home with short positions?
Good evening, Lata. I think yes. See, the idea is that the market was contracting between 10,700 to about 850, and that lasted for about 9 to 10 sessions, and then got violated yesterday on the downside. So we clearly begun a phase of expansion. Well, there can be a day of pullback, etc. But I think broadly now, as long as 10,680, 685 is not being crossed, the chances are higher that in sometime in the July expiry, we might head towards 10,450, 430 zones. So I think the idea is to be traded more on the short side. Clearly, there are some stocks which are doing well in this market as well, but I think broader markets as well as stock specific basis, I think the idea or bias should be more towards the downside.
Okay.
All right, we proceed then to the second headline of the day. Sticking with markets, the mid-cap carnage continues for the second day. The index was down almost 2% in the red. In fact, it is 15% off the highs on a year-to-date basis and 4% off for the week itself. 40% of the stocks in the mid-cap index are now in bear market territory. This comes as, I mean, the backdrop today. In the market mid-cap sort of sell-off that we saw, we spoke with Hiren Ved, Director and CIO of Alchemy Capital Management, and Anand Shah, Deputy CEO and Head of Investments of BNP Paribas Mutual Fund. Let's quickly listen to what both of them had to say.
We saw a record overvaluation of the small and mid-cap index to the large cap index in Jan this year, right? I mean, that premium on a trailing PE basis was almost 22%, which I think is probably the highest premium that you would have seen in the last 10 years. While you may find individual stocks where the risk reward may be favorable, but I think overall as a basket, there might be still a little more mean reversion to the mean that might happen over the next few months.
This is the issue as far as the market, the nature of the market itself, that, while the previous 4 years we were waiting for earnings, but the earnings were not really as good as one would have liked, but the markets were continuing to do well. Now today as we speak, we are actually getting a good tailwind of earnings. Both large caps and mid caps, we are seeing quite a good traction as far as earnings is concerned, but unfortunately the macros, talk of crude price, talk of interest rates being shooting up, I think that's sort of creating some sort of a scare among the investors.
Okay, Mayuresh, very quickly, what's the in-house view? You all expect more falls in the mid-cap space?
It is a probability, Lata, and again I think the kind of apprehensions that one really has surrounding this entire space, I think the sentiments itself are not very buoyant at this point of time. So yes, I think The larger universe might still witness some softness, but again, I think qualitative names should probably still be taken out as standout candidates from a long-term perspective.
Okay, we will come to you for those names as well. But now to the third headline from the street. The Indian rupee fell to an intraday lifetime low of 69.09 versus the dollar. Today's fall can be attributed to a variety of factors, including a strengthening of the dollar index and, of course, higher crude oil prices. Okay, just a word more. It's also perhaps, in my view, because of a synchronized fall in several EM currencies. When we saw the Argentinian fall, we saw the Brazilian real, we saw the Turkish lira struggling, the South African rand. But more recently, in the past 2 or 3 days, the Chinese yuan has seen some fairly sharp falls. And the suspicion among forex dealers is that probably the central banks over there are happy to let the currency depreciate because they're being faced by high tariff walls. So one way to beat the higher tariff walls is to let your currency fall and make your exports attractive. So that also is kind of ruining this sentiment in the currency markets. Maybe we just want to listen to one more expert on this, Anant Narayan, and HSBC's Manish Wadawan spoke to us about the rupee. Here's what they had to say.
There's been a confluence of external triggers which has led to rupee weakening. Clearly the news around oil, all the noise that we're hearing about trade wars and the impact on India, and every single tweet that seems to come out of President Trump's mailbox is obviously causing jitters. We also have our own set of basic vulnerabilities which is making it worse for us. We've had an issue on the external account for a while now. You know, our exports have been floundering. The last fiscal year, we did see that there are some core issues in exports, you know, ready-made garments, gems and jewelry. Overall, the numbers are pretty tepid. On imports as well, we still continue. It's not just an oil problem. We're continuing to import a lot of stuff, including gold, including smartphones. And frankly, domestic industry needs help to be able to replace some of these imports.
The factors which are pushing rupee lower is the FA outflows which have happened around $3 billion in the last 3 months, equity and debt combined, high oil prices, and overall, I think the dollar strength versus Asians and other currencies also. So it's a combination of a lot of factors which is pushing rupee down at this moment. At least at the moment, the direction is negative for rupee, and there is a lot of pressure on the currency.
Okay, we also spoke with Sajid Chinoy, Asia economist at JP Morgan, and asked him if this fall in the rupee is worrisome or actually welcome.
Well, it's a bit of both, Lata. I mean, just understand the larger global backdrop here. We've had a dollar that strengthened almost 7% in the last 6 weeks, number one, both because of desynchronized global growth and because of fears of a trade war. All emerging markets have come under some pressure. I would argue India is much more fortified than many other emerging markets, as well as 2013. But what's interesting is in the last 10 days, something different has happened. First, you had the emerging market current account deficit countries come under pressure. Argentina, Turkey, South Africa, Brazil. The last 10 days has been predominantly Asia. Right? 6 of the worst performing currencies against the dollar in the last 10 days are Asian. So this is very much reflecting the regional fallout from a tariff war between China and the US. I think that's the backdrop here.
Okay, well, but on the whole, Sajid was saying that it's not all that worrisome given India's macros. We'll take a break on that note and also leave you with some more market opinion that we got from JP Morgan's Bharat Iyer and Citi's Mohammad Appabhai on the global scenario as well. Listen, we're back in a jiffy.
We started this year expecting a low return, high volatility year. The Nifty was at 10,000 and we had a fair value target of 11,100 to 11,300. I think we're at the halfway mark, and what we've seen is, the index has given returns of 6-7%, so not a bad outcome after last year. We've seen a fair bit of volatility. I think this trend will continue through the year. We do believe that, we are not in a bear market, and we will hit 11,300 during the course of this year. You have to keep your expectations of returns modest over the next 2 years. I think, a 10-12% return every year would be very good, because markets will have to fight the headwind of rising cost of capital, both locally and globally.
In Asia, we're seeing the replay almost of 2015. So if you look at what's happened in the last few days, right now, China property names are the ones that get hit the hardest. China financials get hit the hardest. Then the next stage will be Indian real estate for some reason, which we're not completely sure why that happens. And then after that, you start getting Japanese insurers and then Japanese financials. And then eventually, the people in the developed markets start realizing what is happening. And then eventually, the last domino that will fall will probably be the US equity market.
Welcome back. You're still with us here on Markets Today Talk Back. Mayuresh Joshi and Mitesh Thakkar are with us. They've been answering your questions. We've been decoding what how the day panned out, and we've been taking your questions as well. Well, we got through three of the top headlines. That's markets, mid-caps, small caps, and the rupee. Here's the fourth one. ICICI Bank slumped in trade, and the stock closed down 3% or so after a newspaper report revealed fresh details from a whistleblower complaint made in the month of March. The news report alleged that the bank extended loans to stressed borrowers through letters of credit and thus understating NPAs. Lata, I mean, every time we think that bad news is all but priced in, there's something fresh which seems to be coming out.
Yeah, I mean, this is a lot of investigations, and as more details come in, the stock is unable to rise. So clearly, there are a lot of buy reports out there on ICICI Bank because it has excellent subsidiaries, especially insurance subsidiaries, which give it support. And if you strip off all these subsidiaries, people will tell you that the bank itself is available probably at one-time book, probably as cheap as many of the public sector banks, and therefore it's unlikely to fall too much. Yet, when fresh bad news hits immediately, there are sentimental negatives, and today's news report, of course, contained details which would make a lot of investors a little wary. But is it a buy? That is the question we really should be asking. A lot of people would buy the distress, I would think.
Okay, so that is the ICICI Bank. We will move on to the
Maybe I want to ask Mayuresh.
Yeah, maybe put a question.
Mayuresh, what's your sense? Has ICICI Bank fallen enough for it to be a buy?
No, so I absolutely agree with you, Lata. I think I concur with what you probably laid out at this point of time. I think any such incremental news that probably comes out, the sentimental hit is obviously reflecting on the stock price. But I think the fundamentals have been improving. So look at the recognition that they've probably done on the balance sheet, the provisioning that they have taken. Yes, NCLT-related provisioning will still probably be there for Q1, Q2. But a large element of their advances to the retail in excess of 55%. And largely that should improve their return ratios going forward. So I think if you leave aside this part of the news, which obviously, as you rightly pointed out, a lot of investigation agencies coming out, and the news intermittently will come out. If the stock falls further, I think it's a good time to accumulate. So I think we remain quite positive over the longer term on this stock. So any significant fall becomes a good buying opportunity.
Okay. Thanks a lot for that. With that, we go to the last headline of the day, and that's on GST. GST is just 2 days shy of completing 1 year of implementation in India. Historic, and on the occasion, FMCG majors have good things to say. They were the ones who would have been affected. Marico's Harsh Mariwala spoke to us, and he says that disruptions on the ground are mostly over, while Britannia's Varun Berry says the demand growth has been reasonably good these days.
Initially, there was some trade destocking in the month of June 17 after the GST was launched, or prior to GST being launched. And that had its own impact. But I think if you ask me today, are you back to normal? I would say that by and large, yes. I think all the sectors, at least definitely in the FMCG sector, is back to normal. I would say that it's a year where the GST has evolved.
The momentum is coming back slowly, and we are hoping that it continues. Leading up to the election year, hopefully we will be able to see some more momentum as we go forward. The demand growth has been reasonably good. I would say not a big change from what it was, but we've seen about a 250 point increase in overall industry growth. So from that perspective, still single digit. It's not like a double-digit industry growth, and we certainly are waiting for that time when the industry overall starts to look at a double-digit growth. But definitely a move in the right direction.
Okay, we have a question now on Britannia. Kulbir Singh from Nagpur has written to us with a question. He basically wants to know the future of Britannia, whether, I guess, he's interested in buying it and whether he should do it or not. How would you assess the company and fundamentals, Mayuresh? And is it a buy at this point?
For Prashant, I think looking at the fundamentals over the past few quarters, the management has done an exceptional job, both in terms of volume growth and again the premiumization in terms of their portfolio has yielded brilliant results in terms of the realization growth. On the other hand, I think their cost optimization strategy has worked for them. They still expect cost savings in excess of around 270 to 80 odd crores to be played out this year. And again, I think in terms of how their entire return ratio profile stand out, I think they are one of the best probably in the industry at this point of time. A large element in terms of valuations, obviously valuations on the higher side, even compared to its own historical mean. So I think the outlook probably remains very, very robust for this company. I think valuations are the only niggling point that work against the company. But I think the investor probably, if he's looking at Britannia, I think a staggered way or a significant fall in the stock should be a good buying opportunity.
Okay. Your thoughts, Mitesh, on Britannia, at least say for the next 1 or 2 years? It's had a good run, year to date, 30% rise in 2018.
Yeah, I think, Lata, one of the other stock chart which has been making higher highs and higher lows, and I don't think that pattern at least appears to be in threat. I think with most of the medium to long term indicators still rising, I think this stock remains a buy as well. You might get about 500 point kind of dip in case the Nifty goes into a bigger correction. But I think eventually the stock is showing signs that the uptrend or the higher high pattern will continue for many months to come by. So I wouldn't hesitate to put a target in excess of 7,200 to about 7,500 if you give it another year and a half kind of a time. And I think any declines of 200, 300, 400 points would be a very, very welcome buying opportunity.
Oh, wow. That's a 15-16% rise at a time when we are seeing markets shed. That's a great buy. The next SMS is coming from Adnan Rashid. He has written to us with a question on Marico. Wants to buy 500 shares of Marico, wants to know the right time to enter the market. That's dilly-dallied a little more than other FMCG companies, hasn't it, Mitesh? What is a good time to buy Marico, and should he buy it at all?
Yeah, so I think, yes, it's underperformed the overall FMCG pack slightly, but I think the chart structure still remains quite positive. In fact, I would say this is a good time to buy Marico. It's trading very close to its all-time highs this month. The highest was 353, which is the all-time high for the stock. It had about 350 in September 17. So I think I would be comfortable accumulating at these levels or buying at these levels. I don't think the stock will possibly start getting below 310, 315 zones any which way. So you have a very limited kind of downside risk. And once I think the momentum picks up, I think the stock can head towards 380, 390. It's a low beta stock, might still underperform, but looks like a safe and sound bet to get in over here.
Okay, Mayuresh, what would your view be briefly, Marico?
No, so Prashant, it has created strong moats around its products, but a large element, in my opinion, is probably how the volume growth pans out, and if it's better, and the management commentary surrounding that is indicating to this fact, because you probably did see some price degrowth in one of its key products. So there again, I think the management commentary is something that I'll be probably looking out for. Again, I think a significant dip is what I'll probably be looking, but an alternate choice also remains with Imami in terms of my expectations of reasonable volume growth. And again, comparatively to what the other peers have done, I think the valuations from Imami from an FY20 perspective seem to be a little bit cheaper than the others.
Okay. Well, thank you very much, Mitesh and Mayuresh, for taking up questions from our viewers and being with us on Markets Today. We wrap up this edition of Markets Today. On that note, thank you for watching.